The BattleFin Ensemble platform is a game-changing extension of our global Discovery Day events. Now you can have on-demand access to some of the world's best alternative and traditional datasets from anywhere in the world. Our sandbox environments have the preloaded tools needed for researching datasets, so you can get right to work. Now every day can be a Discovery Day. Sign up today at battlefinensemble.com.
Hello, everyone. My name is Kelsey Zile, and I lead sustainability globally for AWS Data Exchange. AWS Data Exchange is an AWS service that makes it easy to find, subscribe to, and use third-party data in the cloud. In response to the growing focus on sustainability that we are hearing from our customers across verticals, including financial services, we began to work to unlock an array of sustainability research, innovation, and investing use cases by expanding the selection of sustainability-related data products, including environmental, social, and governance data available on AWS Data Exchange. Environmental, social, and governance (ESG) data, such as carbon scoring and emissions data, is increasingly important for financial service institutions and corporations who are looking to assess portfolio risk, meet specific investment mandates that align with the values of their customers, or report on the sustainability of their portfolio. So far, AWS Data Exchange has onboarded over 20 ESG data products, representing third-party scores, raw company-level ESG metrics, and reporting frameworks. Examples include SASB's Sustainability Industry Classification Systems global mapping data, SRAE ESG and CG scores from Arabesque, and an ESG data feed on the Dow Jones Industrial Average Company Universe from RepRisk. These products can be used to monitor ESG and business conduct issues related to clients, investments, and/or suppliers, to identify companies that may have violated policies or international standards, and/or benchmark a portfolio's carbon emissions. You can find this expanding offering of ESG and other sustainability-related data products on AWS Data Exchange by using the link below or by visiting AWS Marketplace, searching by ESG, and refining by data products. If you are working in the sustainable finance space, please check out the ESG data products available on AWS Data Exchange or request additional selection and learn more about the AWS Data Exchange service by visiting our sustainability landing page.
When we approach the alternative data space, our customers continuously tell us alternative data is really difficult to work with. And we're here alongside BattleFin to really make it easier to work with. One thing that's clear with the alternative data space is the volumes of data, the number of providers, the histories, the frequencies, all of that is going to be expanding, right? As time goes on, these histories expand, the number of providers expands, and we want to be there to help our customers engage that content. And the way we want to do that is through a lot of our Refinitiv platforms. We're set up to be engaging with our partnership with BattleFin, with these all providers to deliver a lot of this content. And so our plans for 2020 are along those lines.
So in 2020, we see quite a few people turning towards more detailed data sets. On the one hand, those who are very experienced with data. On the other hand, there are a lot of new entrants into the market, and so they're looking for very simplified signals. So data that is converted into actionable insights that they can use rather than having to mine data and generate their own insights, which can be very time consuming and use a lot of resources.
Interest in alternative data is definitely growing at a fast pace. And so when you combine that with our Refinitiv fundamental data and core products like StarMine, it allows customers to develop deeper intellectual analysis and really focus on what matters, like developing and testing differentiated ideas, optimizing portfolio, managing risk, and seeking alpha.
No matter what anyone says, in alternative data, finding signal is hard. As the leader in the space, BattleFin is driving the future of alternative data sales with something we call exploration kits. Exploration kits are like data roadmaps designed by you and hosted on Ensemble. These kits show buyers how best to use your data in a practical sense. Creating one will accelerate your sales process because they help data buyers understand what they're looking at faster. And because they're hosted inside BattleFin's Ensemble platform, you can leverage fundamental and reference data from Refinitiv, as well as combine multiple data sets to unlock and find real alpha. Give examples, use cases, and build models that highlight the power and alpha generating capability of your data. Every data set is different, so there's no template we can share for building a toolkit. But the process of starting your exploration toolkit on Ensemble is very simple. Just log into Ensemble, navigate to the Sandbox tab, click the plus symbol, and create a new Python 3 notebook. This is the interactive computational environment where you describe and illustrate the steps data buyers can take to access your data's insights. For example, you might start with a code to have Ensemble pull your dataset into the sandbox. Now maybe you pull in some reference data and limit that to a certain time frame. Now combine those two sets into a table and create a delta column. You get the idea. You're literally giving them the codes and sequence of steps they need to analyze and understand your dataset faster. Simple, right? Look, the alternative data space is evolving. It takes a lot more than conversations to close deals. If you're interested in accelerating your sales cycle, BattleFin believes exploration kits are your answer. For more information, visit battlefin.com.
Hi, everybody. Welcome to day 2 of our year ahead in alternative data. We really had some exciting content yesterday, some really good one-to-one meetings, and we want to keep it going. So before we get started with our data buyer panel, I did want to mention a couple of things. We had Dataplore sign up last minute. So please go into Ensemble, check out their profile. They're a POI or point of interest data provider for small and medium businesses in emerging markets. So if you're looking for some accurate business opening and shutting data, it's worth doing a one-on-one with these guys. Another one to highlight, Vertical Knowledge. We have their short-term home rental business data set on Ensemble. This can really be helpful, especially with Airbnb and a couple other IPOs coming. Also take a look at their self-storage, some of their car rental. Those data sets are great. And if you're looking at tracking or recovery in the airspace, transportation, both Infare and Skyscanner have some awesome data. So I'll go ahead and put those up on the screen so you guys can book some one-on-one meetings. But after that, we really want to get started. We've got an awesome data buyer panel with Co2, Balyasny, as well as Snowflake. So without further ado, let's get this party started.
Welcome to BattleFin's Virtual Discovery Day. Coming up next, a data buyer panel, focusing on the evolution and future of the alternative data market. Joining us today is Alex Izadorczyk, Head of Data at Co2.
Alex leads the data science team at Coatu, overseeing the strategy from the engineering and research teams as they integrate data into the investment process. Also joining the discussion is Carson Bonnick, Chief Data Officer at Balyasny Asset Management. Carson is responsible for data sourcing, data science, web scraping, and data engineering across all of the firm's strategies. We'll also be hearing from Matt Glickman, Vice President of Customer Product Strategy, Financial Services at Snowflake. Matt is an industry leader in enterprise data platforms with over 20 years' experience in developing business-critical analytics platforms at Goldman Sachs. And now, please welcome your moderator, BattleFin CEO and co-founder, Tim Harrington.
Great. Well, welcome everyone. Thanks for joining the Data Fire panel. We'll look at 2020 and then we'll also dive into 2021. Carson, Alex, Matt, thanks for joining us. We're in our new virtual studio here. So whereas I can kind of feel like we're getting closer to seeing you in person again, we're still not there, but vaccines are coming and, we've got a great discussion ahead. So we'll jump right into it. What were some of the big trends you saw in the data space in 2020?
Sure. Yeah, thanks. Thanks for having me here. It's great to be on a panel with Matt and Alex as well. So really appreciate it. I think 2020 was a great year for data. Certainly within our firm, we saw there be a large increase just in the number of requests and the application of it. We have a fairly large data footprint to start with, but what I think people realized was that as the market changed so quickly and as the environment changed so quickly, that it was really important to get new information into their process. So we centralized a lot of things. Obviously, COVID was a huge theme. I'm sure we'll talk about it here on this panel. But we centralized a lot of the ideas around COVID for the entire firm so that it wasn't just, 2 or 3 pods in healthcare looking at one thing and then, other folks in consumer looking at another, but rather tried to aggregate all of those things. In addition to just expanding sort of the footprint of data and having to go outside of data sets with which we would historically make trading decisions on. So looking for more real-time information, things which maybe don't have as long a history as other things that we would use. But it was certainly coming into December and looking back, it was a year in which all groups, macro, commodities, certainly long, short, were highly active in data and looking at new data.
Great. How about you, Alex? What did you guys see?
Sure, and thanks for having me. It's great to be back here. I think the last in-person panel I did was with Matt and you, Tim, in February or early February 2020. So it's nice to be back and welcome Carson. Look, 2020 was a year where I think data played a huge role. I think I agree with Carson that the speed at which things changed and the rate of divergence of just the economy was just so much faster than we usually see. It was a good year for certain kinds of data sets where you could measure what was happening very, very quickly. And I think similar to Carson, there was an opportunity to use new types of data sets, and specifically in my mind, public data that was perhaps less relevant and became extremely relevant. So COVID dashboards, COVID data is the most obvious example, but there were a number of vendors or even just agencies publishing data freely. Home-based business openings comes to mind that were quite useful. So I think in that sense, there was a lot of opportunities that presented themselves.
And Matt, did you see that? Was it the free data sets that were onboarding kind of the fastest that maybe Snowflake, picked up and saw that proliferation, or was it, just continued strong, onboarding across the board, or what did you guys kind of pick up from 2020?
That's a great question. Again, thanks for having me back, Tim. It's great to be back here, and I can't believe it's been less than a year. It feels like 5 since we did this in Miami. So again, great to be back and welcome Carson. I think this year was a real disruptive year. This dislocation from where people were using their own traditional data sets from historical time series and using them to predict the future, just didn't work this year. This was a completely anomaly year. And I think the demand to get new data sets in a timely fashion, exploded. And for us, Snowflake as a platform where we not only were serving the financial services industry, but industries across the board, to Alex's point, the demand for these new public and private data sets, really exploded on the scene. I think Alex is right. I think, and particularly for us, one of our data partners, Star Schema, published a consolidated view of all of the case data from Hopkins and from WHO and New York Times and the like, and brought it together and really taught the world the importance of getting data at its source without having to go through all the mechanism traditionally to get new data sets in, because there was this demand to see this new data set now. And then lastly, what it also emphasized was the necessity for alignment of data. People within the industry know about concordance and aligning company data with market data, but all of a sudden the rest of the world understood that in order to align data about a particular city, about a particular state, you need to have the right city and state codes, right? These things that are just became, an educational event for really cross industries overnight.
Yeah, and maybe we can dig into some of the categories. So, I mean, Carson, you guys have a multi-manager platform. You've got quant, you've got fundamental, you've probably got bonds, everything across the board. Were there any, kind of data categories that you guys saw a resurgence in, or more demand from than you probably have in the last couple of years?
Certainly, yeah. I mean, geolocation data was one area where we found there to be an uptick. I echo the comments of Matt and Alex, where that public information was a huge component of it, frankly, and it wasn't because public information obviously was unique, but I think in many cases there was an opportunity to still be faster than what was out there. So as opposed to maybe a manager waiting for the sell side to report to them, the openings and closings of stores, or the latest Johns Hopkins statistics, there was still an opportunity for firms that had the footprint to make that a very quick process, so they could get information to our investors as quickly as possible. The one that comes to mind, this year more than most, outside of geolocation, is actually sentiment. When you're in markets where there aren't any historical context, except the Spanish flu, you start to look for things that try to describe the current environment as best you can. And for us, that meant looking at a lot of non-traditional social media outlets, looking at Reddit, trying to figure out who's got vaccines where, or what the progress is, looking at just a lot of things that aren't standardized maybe through a data marketplace necessarily, or a typical feed, having to invest time, in our case, of sort of proprietarily collecting that information. But I think people, a lot of folks are trying to get a sense of sentiment out there, and that was another area that we saw there to be quite an uptick for.
How about you, Alex? I mean, you guys tend to be more of if we have Carson on the multi-manager side, you guys are more big flagship fund. Were there any categories that popped up this year? Carson mentioned, geolocation. If we talk to our customers a year or two ago, they're like, "Oh, it sounds awesome until I get 5 billion pings and have to figure out what the heck that means." Were there any other categories of things you guys saw this year that you felt would be new and different, or was it the advent of a lot of public data? How did you guys see 2020 and progressing?
So I think in that regard, I think data sets, I would agree, data sets like geolocation became popular again, mostly because they provided real-time ways of measuring something that is easy to measure with geolocation data, namely mobility, crowdedness, broad economic activity. So in some sense, that did become more popular. And I do think the quality of data out there has, in terms of geolocation, has really increased. You can simply buy aggregated indices of cities, and Apple, Google, SafeGraph were publishing these indices. And it was those kinds of data sets were sort of useful enough and don't have all the other downsides of geolocation data, which is like data processing and the sort of compliance and privacy side of things. So in some ways, that and everything related to real-time macroeconomic data, I think, was very popular. I think typically in equity long short, there's a tendency to ignore macro data. It's often deemed as sort of less actionable and nice to know. And I think often that comes from a perception that macro data is this quarterly time series that comes out 3 weeks or 4 weeks delayed. And so it's sort of not that helpful if you're picking individual equities. And I think what we saw this year was, hey, there are macro data sets out there, some public, some private, that can be near real time and do matter when the whole sort of consumer space changes very quickly. So I think macro data would be one surprising answer for sort of like an equity, even for a specific equity long short focus. I think a second sort of area, new area, I guess, for data would be, as Carson mentioned, sentiment. And where we found where there's a fair bit of use was not just sentiment around surveys or consumer sentiment, but also sentiment just around the broad market. Things like, what are aggregate average gross exposures, net exposures? What are our peers doing? What are retail investors doing? Which was clearly a very salient point this year. So those kind of aggregated, what I would call flow data sets. Now you could argue, is that is that as alternative as credit card data, or is that something similar to what traditional quants would use? I don't know, but these are generally new data sets that definitely weren't prominent before this year. So I think that would be the second category.
Yeah, I would say that we heard a lot of that too, like, traditional fundamental, deep research into each name, coming into a market where, you're in March or April and, numbers don't matter anymore. It's not, you're not looking at, your cash flow and, income statements and things. You're trying to figure out, hey, what's the velocity of change? Is it getting worse again? Is it getting better again? I guess, Matt, from your perspective, were people asking for data faster? Was it more categories? Was it more, give me everything you got? Like, from a more of the marketplace perspective and the platform, was it, I need access to data now, instead of, okay, this will be great once I get done testing it 3 to 6 months from now? Or did you see a speed demand increase?
That's a great point. And, in some ways we were in the right place at the right time, where this notion of trying to build, an IT pipeline, 3 months down the road and get an answer out was never going to work in this climate. So the idea that we can basically connect buyers and sellers, providers and consumers, in an hour, an afternoon, because effectively how our platform works, data doesn't have to move. Like this, really was the reemergence of, I guess, an alternative data explosion where we could connect buyers and sellers and not have to be in the middle of that transaction. Like, we were just matchmakers. We launched our marketplace last year, basically as effectively a global catalog where all of our customers could connect with one another, either the public data providers or the private data providers. A couple of bigger data providers launched on our platform last year, and that continues to accelerate. But yes, I think the idea of getting access to data now and getting it, and actually, and this is a point that I've spoken to Alex and others, about this, is the ability to collaborate on these new data sets, right, was a real key. Because one thing to get access and say, great, I have access to the afternoon. It's not what I expected to see. I'm missing certain, attributes. That the ability, effectively the Google Docs of data collaboration, where I can get a data set, I see it, the provider's seeing exactly the same data because it's a pointer on the same actual data being stored and saying, well, I'm seeing it this way. Well, you should be looking at it this way. Oh, actually, this is something we need to change. We change it. The consumer sees it. This true data collaboration was as important to getting data quickly. It's actually being able to collaborate on that data in real time.
And I guess shifting gears, Alex, as we look to 2021, what are some of the things that you're keying in on or trying to set up for success in 2021? Is it more categories? Is it maybe visualization? Is it we've had COVID, we've had the pandemic. Is it really going to be about vaccine tracking? What are you guys thinking for 2021?
Sure. Well, look, I mean, I think Matt alluded to this, and we haven't talked about it yet, but I think in some ways, one of the most exciting things looking forward is technology, is what big technology shifts will happen that's going to affect alternative data or just data science in discretionary investing. And I think that when we spoke almost a year ago, one of the things I had said was Snowflake would change everything in the sense that data delivery would become much easier on the platform. And I think what was interesting was as we were all scrambling to ingest the tens of different public data sets out there, we ran into a few problems. First, all of these data sets came from a different source. You somehow had to build piping to all different sources on different cadences. There was real ingestion challenges, and I think the people who benefited the most were people who had very flexible systems to nimbly ingest as much data as they could from a variety of sources and sort of maintain that. I think as someone mentioned, you didn't have 3 months to build this. You sort of needed to stand it up in a day. That's how quickly things were moving. And so in retrospect, if all that data had been on Snowflake, obviously everybody would have access to that data immediately. That would have saved a huge amount of engineering time. So I think in some ways, the Snowflake data exchange was a big win of 2020. And I think if you look at the sort of technology space as it relates to alternative data today, first, I think there's 5 large platforms, and I'm borrowing this from Bob Muglia, who's actually the former CEO of Snowflake, that I think are credible when it comes to putting all of your data on. And I think those platforms are essentially Snowflake, Databricks, and then the 3 public clouds. And so then the question really becomes, where do you sort of, what's next? What piece in the infrastructure is missing? And I would make a strong case for data visualization and for interactivity of data in the hands of the actual investors. See, I think, and it depends on your firm, but I think a lot of firms are still, they have data scientists, and the data scientists throw the data over the wall to an analyst that uses an Excel. Or the next step is they put it in some sort of Tableau dashboard or BI dashboard, and the analyst can cut it a few different ways in the BI or Tableau dashboard, right? And we've made a concentrated effort to centralize all the data in one place, centralize all the dashboards into our own web application. But then still we have to think, okay, that's great, but BI dashboards generally have load times of 5 to 6 seconds. That's not an acceptable amount of time for any website, app, or sort of mobile app you use, right? And so why is it acceptable or a good experience for data and BI dashboards? And so the thing I've become really excited about has been who's going to enable data interactivity for non-technical users. And we've been working with a number of vendors this year. I think Snowflake, and one of the things Snowflake has talked a lot about is building apps on Snowflake, not just analytics, but actually building data apps on Snowflake. I think there's a number of other really interesting providers too, Rockset, Imply Data, a number of others, and a number of interesting data visualization technologies, eCharts, Vega, that are coming out and I think will be very popular. So not that that's the only priority, but I think when it comes to technology, I think the level of interactability is important. And I think we've seen the third-party vendors do this very well. From the public demos I've seen, just what's available on the website or what's available in newsletters, Earnest Research, for instance, has done a really interesting job with the quality of dashboards. You can tell they're old, these sort of Tableau dashboards, their news seems much more interactive.
Yeah, Carson, are you seeing that too? Are analysts on more of the fundamental teams wanting access to the data sets in a more visually pleasing way? Or are they really coming back, saying, look, I need more data, I need data within a specific category? What are you seeing from more of the, multi-manager aspect for 2020?
Yeah, well, like Alex was describing, our group's sort of centrally oriented. So we service long, short, macro commodities. Yeah, I mean, I largely agree, though I would say that, visualization to answer a specific question we're often asked, less so to develop maybe a firm-wide platform for it. This year that's changed a little bit, though, and I think that's, to Alex's point, that's partially driven by just the macro and commodity folks who are highly visual, who are making decisions using visualization, often comparing curves, comparing forward rates and the like, processing that information visually, having that go back into equity long short, which traditionally, is an Excel shop at the end of the day, and has been. So for us, our normal sort of order of operations, if you will, is obviously define the thesis. And we have a team of sector data analysts in the front office who work with our PMs to, help get them up to speed on data and to help them answer the questions. Define the thesis, bring the data in, obviously. We will then, deliver a lot of that information through Excel plugins still, because that's where the models live ultimately for the analysts or the PMs. But to Alex's point, increasingly folks are looking to get sort of these, higher order views, these sort of God's eye views on things. And COVID certainly for us was one of the great examples where, probably like Co2 and other firms, trackers were developed, visualizations were developed. But again, the power of that was certainly in the clarity of the visualization, but then also just in the aggregation from these various viewpoints. I think had COVID happened 5 years ago, you'd have teams that were looking at one set of data, trying to make decisions just based on their own subscriptions and their own ecosystem. Another business might look at its own set of data. It's been very siloed, at least from what I've seen at large platforms historically.
Any of the
multi-manager space. And so this year, what we found was all of that being brought together, where the macro teams were collaborating and sharing ideas with the long short teams, index reval, talking with the TMT or consumer PMs on who they think is going to come in and out of the exchange and why. It was very fluid and it's very fast moving. But certainly I think to Alex's point, and this is more of a general statement, but you only get data right if you have your technology stack right. Like that is, we've seen time and time again firms who have 10 years ago, led with AI and machine learning, spun up sometimes groups that were hundreds of people, only to get imploded, or blown up 3 to 4 years later, because they couldn't deliver on the promises that they were making. And if you look through the thread of that, it's largely, a lot of times it's based on the fact that they didn't invest in their technology and infrastructure the way that Alex is describing. I mean, I think that's a key accelerant. Snowflake is a key accelerant, right? And one thing we'll see is that more firms, larger firms, looking for new technologies, as opposed to the sort of we have to build it here scenario. That's definitely been a big trend within our firm as we've stood up our data organization over the last 3 years. Let's bring in Snowflake. Let's bring in a Databricks, because my word, we're not going to create that stuff, right? I mean, come on. So, using the best of breed where needed and where warranted is really smart.
And I guess just following up on that, one, did you see some of the holdout maybe pods or teams that hadn't been using data start to gravitate and ask for more data this year, or just getting access to the things you were building or the public data sets, or were they kind of look, we're sticking to our guns. We're going to go retrench, and you guys see both. You have quant, you have fundamental, you have all these things. Like traditionally a very hard year for the quant world because you don't have, many things to look back at to say, oh, I'm going to train my model based on X, Y, and Z. In the case of the fundamental world, if you were able to get this right, this was a great year for a lot of, stock picking funds that could really, move on the dime and adjust to that. Did you see that kind of, I guess, at Balyasny, and then we can move to you, Alex? And but was it a year of adoption for some people that may have held out? And then, what are any other trends that you saw for people that were really kind of able to nail it in 2020 versus, some of the laggards?
Yeah. Well, I think the answer is yes. One of the things we talk about internally is sort of how our COVID tracker, for folks who weren't maybe data aware or didn't come in, purporting to have sort of a quantamental or semi-systematic strategy, how the COVID tracker for many folks probably showed what the power of data could be, right? Who maybe hadn't seen it. And now, granted, there's a lot of folks who do, but again, because of the silos that often exist in organizations, being able to marry data from across strategies and to show somebody, oh, these are ideas that the macro teams are looking at. These are ideas that the long short teams are looking at, and have that be sort of available in one place for folks. I think was an unintended consequence of sort of, enlightening those folks who maybe were on the fence about it or didn't quite know how to approach it. Data doesn't have to be an alpha signal in all cases, and it's the secret is mostly it's very hard to make it just be a direct sort of plug and play to data in, alpha out, and this year was a proof of that context being so important, right? So I think platforms that had scale and were able to do that quickly. I think Alex's point are spot on in terms of having a nimble infrastructure and to be able to turn on a dime, I think he said, or bring something in a day. That really is a true competitive advantage in our space, and it still is. Vis-a-vis our peers and other types of companies. So I think people will walk into 2021 with a better appreciation of the types of data that are out there, certainly, and how it can inform the process. The second half of the year, we've just seen a huge explosion of requests internally on new ideas, on what could we be looking at to answer this type of question, in areas that we hadn't before. And I think that's the right trend. And that trend, we talked about that trend accelerating for many years now. And 2021 is going to help that.
Great. Alex, anything that you guys saw? Was it, kind of any inflection points or transitions in data, analysts wanting more,
right,
you saw?
So we manage our data product internally, as I sort of alluded to. We're really trying to build one single source of truth dashboard. And part of that could just be because of our heritage or our organizational setup as sort of a single manager shop. So I think there's just a different dynamic at play. So in some sense, I don't have multiple pods that might have not been accessing the data. I think the way that we think about it is we try to manage the data product like a product. So my key KPI dashboard is how many people, how many distinct analysts, investors, sector heads are accessing the dashboards. How much are they using them? How much are they interacting with them? And how broad does that extend? So is it junior people? Is it senior people? How many times a week? Do they only go on their dashboard that they requested, or do they go on the dashboards of, others that they can find in the platform and so on? And I think we did see, a substantial increase, really along two vectors. One, there was just an increase in frequency. So we just essentially doubled from the beginning to the end the number of times analysts hit a dashboard period. And that inflection really happened, sort of granularly throughout the year. Like there definitely was a spike when COVID occurred and everybody was checking the dashboard every day. But then what we saw is even when that sort of dropped off, it then continued to sort of steadily increase, as I think maybe more people saw the power in sectors or areas of the business that traditionally haven't had a ton of data. And they realized, oh, hey, I could still use this other dashboard for this. So I think we just saw increased usage. I think the other place where we've had a fair bit of success was actually in the other half of our business, which is actually private investing, specifically growth and venture investing. And we sort of saw that, we've always focused on that area as well. It's always been, another area the data team serves. But I think the rate of usage, increased not 2x, but maybe, 5x. And that really came, it came from a number of things. I mean, one, some technology innovations around integrating the data together and displaying it in a way that's more appealing to a private investor. And also just because there was so much talk in the firm about data around tracking COVID, I think it just creates this level of, maybe a fear of missing out on you're a venture capitalist, you live on your phone, all you do is talk to founders, you don't really turn on the desktop dashboard application, but everyone's talking about the COVID data. And so I think that then prompts you to start thinking, oh, can I use any of the data in the system? But I really think about that usage as, again, having the benefit of being a sort of single manager place where, it's sort of, everybody's sort of aligned as to like what the mission and vision is, but nonetheless, we track very carefully how much success we are getting in terms of engagement. And that was increased this year, which is quite interesting.
This is one of my favorite things about Alex is that, and I've heard him say this multiple times, and I just think it's so spot on around trying to build data products. Like, I think that's something in our vocabulary we need to talk more about. I know Matt does the same thing when talking about Snowflake and building a marketplace. That is just such a crucial way to do data right at firms like ours, I think, is, that implies you're building for the multi, right? As opposed for the one,
right.
To use sort of Bartok there. But I think
that's spot on. I mean, I think it's,
yeah. And Matt, the other question was just sort of data discovery. Like, the reason some of this stuff got so popularized this year was folks were like, oh, I didn't realize we had that, or I didn't realize that was out there. And I think that's where, Snowflake and marketplace is such an important aspect.
Yeah, but I think this is going to be the big thing. I mean, data products not only produced within your virtual four walls, but creating data products and services. One of the things that, kind of comes from this, like if you think about it now, we have the entire world effectively connecting to one interconnected data cloud, right? Where third-party data, public data, private data, as well as each company's own internal data are all now interconnectable and seamlessly movable, right? So now I can not only package up a new data product that is from a primary data set that I have or a combination of data sets that I've accumulated, but I can actually build a service around that to say, if I have some data, if you provide me, data that you want to align to this, I can align it for you. I can find anomalies for you. I can enrich it for you. Right. Again, the thing that's really, and again, what Alex mentioned about applications, and interesting to see applications that internally in Code2 are building, the idea that now you can build these data applications in a way, think about how Spotify allows you to bring your music list to Waze or to a workout app, right? Effectively, I can now bring my personal data and my effectively, personal cloud data into, an app like Waze. That same ability is, again, what we're starting to see will be big for 2021 is where I can now, working at a hedge fund, have data that I have access to, my first, second, and third party data. I will now be able to bring that into an application that a vendor provides me, right? Sort of breaking this barrier, which, always limited where I could only use an application that had the data already built into it. If I have an entire data graph connected to me, Matt, in my current role in my company, if I can bring that data into an application, effectively this data connected application approach, visualization is a big part of this, and I think Alex is correct. But I think it's even broader. Visualization is just one of the examples where I can say I can bring my data graph to an anomaly detector. I can bring my data graph to a concordance service. I can bring my data graph to an AI training system. I can bring it to a risk management system, whatever it may be, and then the results of that app interaction now follow me, so I can bring it to the next application. So this connection, in some ways, the same way we talked about from a platform and the cloud-enabled compute and storage can be disconnected. Now apps and data can be disconnected and reconnected, and really have these personalized experiences that can be built within an organization, like Alex mentioned, or even by a vendor providing it to their customers, really leveraging now what's possible because of the fact that there's this ubiquitous data cloud that everyone can connect to.
Yeah, and I guess following on that, Matt, is that where, for 2021, in the Snowflake world, is it, do you think it's increasing sources? Is it increasing visualization? Or more like, it sounds like dashboarding is kind of a big play for 2021, like following into that visualization, building a product, building something that, the teams internally can use. Do you guys see, is it still just this continuation of new data sets and making them, more visually beautiful, so that people will use them? One other topic, and we'll finish up with Alex and Carson after that, is, okay, we saw what happened in 2021. Macro took the lead, COVID trackers. What do you think we should be looking at, or, the data providers in the audience should be building for 2021? Because, is it the vaccine tracker? Is it, hey, at some point people are going to have to wake up to earnings again and tracking year-over-year estimates, cash flows? Like, do you think there'll be a swing back to the micro environment and, kind of refocus on that? But, we'll go around the horn to finish this off. So, Matt, what are you guys, kind of focusing on for 2021, and then Carson, and then Alex?
Yeah, no, yeah. So I don't think it's about making the prettiest dashboard. I think it's about speed. To what Carson said, the platforms that are now going to be available, like a Snowflake, is really going to level the playing field. 2021 is just going to go faster. Right? We've all realized, what the technology can do now. Now it's going to be a matter of leveraging it and leveraging it faster. The ability to provide I like the idea of thinking about data products and data services, which are now effectively supercharged by what you can now bring to the table and do it, really quickly. And applications, like the ability to build both micro applications and full scale SaaS applications, and have the data where I can now offer a solution to, if I'm a vendor, I can offer a solution to Coatue where Coatue can plug its data into that application. Big or small, is the big thing, but it's really all about speed. And just, what I would encourage the audience on both sides to realize that the playing field has been leveled, right? The idea that you can basically just cruise on what technology has enabled you to do, or what kind of investment strategies have enabled you to do, is gone. And that's the dislocation event that we saw from a provider side, is that now there's this, everyone recognizes the power of this technology, everyone has seen a glimpse of what it can do, and now it's just going to amp up the volume of people wanting more of it, and wanting to get more business impact out of it.
Yeah, that's true. Carson, how about you? What 2021, what do you think your PMs, your analysts, different groups are going to be asking for? And also anything that you think the data providers can do better? Is it communication? Is it, we kind of see it because we always ask people, okay, give us an actionable insight. Give us something to help us help you sell your data. Like, I don't want to read that you're an AI machine learning company. I want to understand, I have a data set that can predict, Zoom subscribers. Do you want to meet with me? Do the one-on-ones. So is there anything you're thinking about for 2021 in terms of, the data world?
Well, I think, if the trend continues, although there's a lot more third parties that are providing access to data, and I agree with Matt in many cases, leveling the playing field. I still think, and this is maybe a controversial statement, but I really think that a lot of what can differentiate a firm is just doing the hard work. Like data, like you alluded to, Tim, data isn't always AI and machine learning. There's a lot of guts to getting things right, as we know. And over time, I think part of what our investment in data is it's trying to prove out the thesis that we can build these building blocks that level up our firm. And that's what we're trying to do. That's why nomenclature like data products is so important, right? I think Alex might have used the term golden copy, or sort of the official version of a particular type of data or data asset. And that is exactly what we're focused on for 2021. So, as opposed to having every team try to chase certain things they need, we want to present a better version that is, sort of a synthesized view across multiple providers. I think smaller firms tend to be a Bloomberg shop, or they're a Thomson Reuters shop, or maybe they use S&P, or they're using a combination of that and some other alternative data. I think there's still a major opportunity for folks in our seats to synthesize that information and present it in a normalized way, which people can make real decisions. I think there's going to be a ton of new stuff in healthcare. I mean, there already is, right? You talk about what would be great to have vendors look at. It's the same stuff from 15 years ago. It's mappings, brand mappings. It's point in time mappings. No one has a great security master. All of those things are critical, I think, to earning the right. That's the phrase we like to use internally. We've earned the right to do really interesting data science, or to use machine learning, or to use NLP. We've earned that right because we've got our technology stack that foundation appropriately built, so I think that's going to continue. We're definitely focused on that. And those firms that have really, at least in the hedge fund space, I think those firms that have really good collaboration and connection with their portfolio managers and analysts are the ones that are going to win, because data in a vacuum doesn't go anywhere. I've done that. I've done that so many times throughout my career and learned it the hard way. The collaboration and sitting next to our investors, internal investors, and figuring out what can be applicable where, and then the caveats of where it shouldn't be used, I think are increasingly important. That's a little for 2021.
Great. Alex, over to you for our final words and,
Sure.
Guidance into 2021.
So first, I can't agree with enough with the sentiment around data cleaning. So look, I think economic forecasting, alternative data, whatever you want to call it, it takes a lot of hard work. That's just a grind. And there's no magic bullet to solve it. It's a question of cleaning data, mapping data, and so on. And any vendor that could help with that would obviously be much appreciated and probably do quite well in the market. The security master problem is the most obvious and most shocking problem that still exists at every firm. On the meat of the question, though, around data vendors and what data vendors should do better in 2021, my primary advice would be just transparent documentation of what you have and where you have it from. It's always good to look to examples. So beyond the Snowflake Data Exchange, I would point to SafeGraph, Oren Hoffman's company. I think it's a great example of a company that has been extremely transparent about what data they provide, what data they don't provide for privacy or legal reasons, and then also coming up with a standard, they're calling it place key, around sort of mapping POI data. And again, it's just a good example. We don't necessarily use it, but it's just a good example of, I think, the level of documentation and transparency that would be helpful going into 2021. I would just end it with my last comment being that if 2020 was the year of the Snowflake Data Cloud maturing, the Snowflake Data Exchange maturing, and as Matt said, I think leveling the playing field in many ways. It's, you know, it's not just a data thing, it's a technology thing. You don't have to be the biggest firm anymore to use Snowflake. I think 2021 will be the year of, as we've all talked about, data products, and that's going to include transfer, packaging of data, and then display and presentation of data. So I'll leave it with that.
Great. Well, we're out of time, but awesome panel. Thank you guys for joining us in the virtual world. Hopefully, 2021 we'll see you in the real world, but really appreciate your insights, and we'll see everyone after the next interstitial.
Thank you.
Thank you.
Thank you.
Lots of places have fundamental market data, and some places have alternative data. BattleFin has both in one place. You know what we call it? The BattleFin Ensemble platform lets you combine multiple datasets in one sandbox, which allows you the ability to source, evaluate, and test your theories to unlock hidden alpha. So while one dataset is good, two or more is an ensemble. Go to battlefin.com/ensemble for a sandbox demonstration.
Great. Well, as I mentioned at the intro, we've got a new section we're calling Data Drops. So first off will be Jonathan Kay, one of our partners on the Connect platform over Ensemble. So I'll kick it over to Jonathan and we'll talk about Roblox, Southwest Airlines, and Airbnb. So drop some data on us, Jonathan.
Tim, thank you for having me. It is a pleasure to be with you all in any capacity today, and looking forward to diving into some interesting trends that we see coming up for Q4. So what we want to dive into today is we want to give you some previews on Roblox, Southwest Airlines, and Airbnb for trends that we're seeing coming up in Q4. So basic context here is we're looking at mobile performance data that correlates with company performance data. Companies haven't reported Q4 earnings. Q4 is almost over. So all the data that you're seeing here, is up through about December 15th. So it doesn't include the next 2 weeks, but we are seeing some interesting trends here. So what you're looking at right now is Roblox, and you're looking at a chart which shows nearly a 1 or a perfect correlation coefficient over the last essentially 2 years. And you're looking at the correlation of Apptopia app sessions and Roblox's reported revenue. Roblox is monetizing via in-app purchases as well as advertising. And so what we found is if you look at the volume of sessions that gamers are having inside the app, it has a really, really strong correlation with like stickiness of the game, likelihood of someone spending money inside the game, and likelihood of someone spending time inside the game, which of course increases the amount of ads that can be shown. So what we're seeing here is that we're seeing that sessions are essentially up 4% quarter over quarter, and that's pre holiday season. So we actually expect to see over the next 2 weeks that 4% climb up a little bit. The company guided at about 250 million for this year, and so it does seem like they're trending ahead of guidance, which is really exciting. And for those that don't know, Roblox is of course an IPO that's like right on the forefront of going live, and something to keep an eye on. Next up, we have Southwest Airlines. Obviously, travel is like a very hot button. And you're looking here at Apptopia's download estimates, so a measure of new users. And we found that downloads has a very, very strong, consistent correlation with revenue passenger miles. That's actually pretty consistent across the whole airline industry. It's especially tight here with Southwest. The only small deviation that you're seeing here is that our data did not quite catch the full drasticness of COVID, though it did catch the trend quite nicely. We also caught quite nicely that in the summer, people who were started to get a little bit comfortable taking domestic flights, which is why you did see this kind of uptick in both RPMs and app usage in Q2. But what we're seeing now is that we're actually seeing that line not only flatten out, but decline a little bit. And so it does seem like, at least from the mobile data perspective, there's some right setting that's going to happen for Southwest Airlines. And so, I would probably temper expectations a little bit here based on what you're going to expect that company to report in January. The last example I wanted to talk through, ironically, is one of probably the most talked about at the moment, which is Airbnb, who just recently launched their IPO. And what we're looking at here is we're looking at year-over-year data. So the green line is going to show gross bookings value, so just like revenue, essentially, for Airbnb in green. And in pink, you're going to see download estimates year over year. And so obviously, it's not surprising to see year-over-year declines for Airbnb. They're not oblivious to the whole travel industry, which makes sense. I think what I wanted to point out here is that if you look at this trend going from Q3 into Q4, you're essentially seeing things start to flatten out a little bit. And what we've seen from the market is that people seem to think that this line is just going to keep going, and that all of kind of the influx to Airbnb is going to actually get it into the positive. And what we're seeing is that while it's absolutely rebounding, it's still going to have Q4 losses year over year. And so, again, we're not saying that it's going down, but we are saying that the trend you saw in Q3 will probably right set a little bit based on what we're seeing from the mobile data here. So, Tim, 3 investment ideas in 5 or 6 minutes. I hope this is enough of a data drop for you guys, and obviously happy to answer questions along the way.
It's great. Thank you for doing that. If the audience would like to meet with Apptopia, we're going to put that on the screen now. We'd like these kind of fast action type of ideas, so appreciate it, Jonathan. And on to our next data drop. So with EPFR has joined us, they know everything, stock allocations, country sector allocation, fund flows. We've got Syed zooming in from outer space over there, but take it away, give us a data drop, and drop some knowledge.
Thank you, Tim. So recently we have seen a huge increase in fund flows to equities, but the value stocks and value funds have seen the most significant inflows, especially after the vaccine announcement. The main thing we have seen, because we can tag each fund at the fund level, growth and value funds, we have seen a huge increase in flows to value funds recently from 9th of November to this day. And also we have seen an increase even at the stock level, because we do also have a stock level allocation database, and we can see and aggregate fund flows to each individual stock. And as you can see on the upper side of the deck, the flows to value stocks were almost all positive at the stock level, versus the growth stocks were not as shiny as they were, and we have seen some even outflows from the growth stocks even in this very strong inflow environment.
Great. Well, thanks, Syed. And if anyone in the audience is interested in meeting with EPFR, we're going to pop that on the screen right now, and you'll be able to see their availability in Ensemble. So we'll get those meetings set up. Always a great signal for both quant and fundamental funds. So please make sure to set up your meeting with EPFR. We've got another onboarding showcase to hopefully engage the audience with here. Earlier this year, we announced a collaboration with AWS Data Exchange. And this is really important because we're trying to get as much exposure for our data provider partners on Ensemble. And now with the added distribution to the hundreds of thousands of AWS Data Exchange customers, we think this is a huge advantage. So I wanted to highlight a couple of our partners that have been really awesome about joining the platform. So probably the easiest way to do that is to show you what's on screen. This is obviously your data buyer login to Ensemble. You just go into the catalog, you be able to read about what Kumi Analytics does. Their China View product provides insights into the level of industrial or manufacturing activity across provinces or within the country in China. This data can be utilized to estimate levels of economic production and activity which may be impacted by trade policies, natural disasters, health crises, and more. Typically you'd go in here, get to view all the different documentation, select the meeting. Now we've actually added that same ability and same exposure level so that you can actually go in, and hopefully the hundreds of thousands of AWS users will be able to drill into Kumi Analytics and learn about them, get access to that information. Another one, Innovate, which we work with, has been giving some great detail, leveraging US trademarks to kind of pull that data in, map it to tickers, and to be able to really come up with some interesting ideas in terms of what's going on in the technology world. Once again, you'll be able to find that data right here within the AWS ADX platform. So excited to see that as well. As we move to the next one, Samurai Data, they've joined us a couple months ago, and it's really been awesome to see Adam and his company grow. And we've had him at a couple of the events, and to be able to see the signals that are coming out of it, in terms of how they can leverage equity and options trade data with company fundamentals to produce 5-day expected returns. Once again, easily accessible on the ADX platform. So really just getting a ton of exposure for what's out there. And as we always like to point out, if any of these are interesting and you want to be able to, meet with them, it's as simple as booking a meeting in Ensemble, going in, picking the day, selecting the time, and it's as easy as that. You request your meeting and you're off to the races. Next up, we have Clipper Data, and Clipper Data offers kind of the most comprehensive database of waterborne flows, ocean going, inland, barge, ship to ship, floating storage, anything from crude to different products that may be coming around the world, and really giving a real-time access. So once again, if we look to Ensemble, you'll see their commodity data and their grain and oil seeds flow data. We've done that as well with the AWS marketplace, moving that over, getting Clipper data, grains and oil seed flow data. Now you can look at it in both spots. One of the nice things, as we pointed out, is if this is of interest, and we heard from an energy panel earlier, this is the type of data set you want to be looking at. These are the things that you want to be using to track those, those trends in the oil and commodities space. So, the next one, which I find interesting, is kind of the stock snips data. A company based out of Pittsburgh, Pennsylvania, financial and ESG news sentiment data sets. I think sentiment was an interesting way to look at another factor this year. So, you have value, you have growth. Stock snips, you could look at the SEC snippets, topics by sentiment, as well as company articles. Once again, going over the ADX marketplace, easy to pull them up, learn about the pricing. A lot of the data marketplaces out there that we see don't actually include this type of data. So something that we would really try to key in and learn as much about. 2IQ, this is a company we've been working with for years, an awesome global insider data set. So they trace over 10 million transactions by over 500,000 company leaders. Looking at the executives, they have a unique insider ID. This is derived from filings and then mapped to Perm ID, ISIN, and a lot of the other mapping ways of doing things. So once again, one that we would highlight taking a look at here in the 2IQ listing on AWS Data Exchange. One other one that we're excited to have on the ADX platform as well as Ensemble is Osmosi. I mean, obviously a big year for the healthcare data sets, and this one in particular was garnering a lot of interest. So not only can you see a lot of the details, the data dictionary, the sample data over Ensemble, but they're now jointly listed on the ADX platform as well. So if that sparks your interest, I'd highly recommend picking a couple times and booking some one-on-one meetings with Osmosi. Awesome data, and something that I think we're going to see a lot of interest throughout all of next year. We've got a lot more coming. We just published Greenwich HR. So if you're looking for employment data, that's another hot area for looking at trends in the recovery. We've got Revelio, we've got Quant IP, and the list just keeps going up. We're trying to do our best to put those over Ensemble and ADX and give you kind of the most insight and details, really, so you can make the determination whether it's a right fit and whether you want to book a one-on-one meeting with them. Obviously, it's great to have the data. So as we always say, get access to data in minutes instead of months. So without further ado, let's roll to the next panel.
Next up, we're going to have a product showcase. This is something new to BattleFin, but we had a call probably a couple weeks ago with IHS Markit, who obviously has been in the news with S&P recently. And they were talking about a new product they had called Commodities at Sea. And I thought that dovetailed really well with the energy panel we had just had. So without further ado, let me step into the other room and interview Carl and see what this Commodities at Sea product is really all about.
Coming up next, Commodities at Sea. Leveraging data to make better decisions with Ensemble data provider IHS Markit. Joining us today is Carl Paulsgaard, who serves as product manager for the Commodities at Sea service within IHS Markit's Maritime and Trade division. Carl is focused on helping investors and physical traders make critical business decisions through real-time visibility into commodity and freight flows. Their service covers the crude oil, iron ore, coal, corn, wheat, and soybean markets, among many others, to help investors and traders better shape their short-term expectations on the market's direction and validate or challenge their market understanding through independently created, accurate, multi-source intelligence. And now, please welcome your host, BattleFin CEO and co-founder, Tim Harrington.
Great. Well, on to our next panel, and we have an exciting new product that kind of dovetails in well with a lot of what we're looking at for 2021 and touches on the commodities space. But welcome, Carl. Thanks for joining us in our virtual world. As we've been saying, it'll be great one day when we're back in person, but for now we're making the best of it and trying to keep it as interactive and as educational and actionable as we can for the audience. So with that, I'd love to just dive right in, have you tell us about Commodities at Sea, and how our investor community could use this product.
Absolutely. And Tim, thanks very much for having me. Hi, everyone. So Commodities at Sea, it is a data set and a service designed to help investors make decisions across asset classes and across strategies from macro to event. And the way that it does it is it can help you potentially identify signals as revealed through the water or changes in the waterborne movements of major globally traded commodities across different categories. So say industrial raw materials, that's going to be your iron ore, your steel making coal, your copper, your alumina. Energy would be either thermal coal going into the power industry or crude oil going into refining or the refined products and transportation fuels coming out of refineries. And then in the food and feeds section, for example, that would be your grains, your wheat, your soybeans, your corn, and on that feed people and livestock populations. And when you look at these categories, what they are is they are the critical raw material inputs that all major industrialized economies need in order to generate value. But then they also are some of the major revenue drivers for export-oriented, commodity-focused economies like Australia, like Brazil, Saudi Arabia, and on. And so what investors can do is they can look at these flows or the changes in these flows to answer important questions. So how are supply and demand trending and commodities flowing? Where is trade changing? By how much? When? And then, which parts of the economy, whether it's a global economy, a national economy, the industrial sector, or even specific companies, which of them are upstream or downstream of this change? And we provide this in near real time through twice daily updates, giving you the ability ultimately to see this and start to use it to, say, detect early reporting signals or look for mispriced assets or get a better sense for the timing and the degree for which the markets may change. We make this available to you through APIs, web-based analytics dashboards, and research notes.
That's great. So what's proprietary about the data? Can you take us through what it captures and the process that you guys go through to actually get access to this information and then display it?
Yeah, absolutely. So here, I'll share a few slides. So our data set is built through the integration of many different data sets, and really it's a derived data set. And the bedrock input of it, or the foundational input of it, is AIS data. So that is location, position, and movement data from vessels. And IHS Markit, our company, has a long history with this particular data set. We were one of the very first companies to commercialize for market intelligence this data set, which really originated as a safety of life at sea system, because these vessels are essentially using transponders to announce their position and heading so that they don't collide with each other. And so we have a vast network, over almost 3,000 different ground-based antenna picking up these vessel position signals. We also have partnerships with an Orbcomm and Exactor, some major satellite providers, to get deep sea coverage there as well. Brings huge streams of data into us, and that helps us understand where these vessels are, where they're going, what they're doing. But that's just the first piece. What you then have to do is have to combine it with information on, say, the ships and the load and discharge locations themselves. So IHS Markit, we have a very unique role in the market in that we are the issuer of the vessel IMO number, that unique ID number that all commercial vessels have. We issue that on behalf of the United Nations International Maritime Organization, the global regulatory body of shipping. And so by being the sole appointed issuer of that IMO number, which is very much like a VIN number for your car, it follows it cradle to grave, and is the reference by which all other pieces of data about that vessel are attached. And this data set gives us more visibility, more complete, more current visibility into the bulkers and tankers all over the world. And we also have a very similar data set for all the load and discharge locations. So all the berths, terminals, and ports globally. And with these two data sets together, that allows us to essentially map out physical maritime supply chains and to have done it in a way which has currency and quality that far surpasses other companies. When you take these data sets and combine them with the AIS data, now you have a very complete voyage database. But then you have to tackle the next question, which is, and you'll see this on the next slide, how do you know what's actually on those ships? Because many of these ships, bulkers or tankers, can carry many different products. So what do? We use the scale of our business to go procure many different types of data sets, whether that's vessel lineups from port agents, inspection records from commodity inspection companies, bills of lading, fixtures from brokers, a variety of different documents to help us tag as many of these different voyages as they're happening with information on their commodities. That gets us a lot of the way there, but you still need interpretive expertise to help you. So we, within IHS Markit, have huge teams that are dedicated to research and market expertise in these segments. So McCloskey, Coal Metals and Mining, our agribusiness intelligence, Opus, a price indexation service in the oil business, and our own maritime and trade researchers. These experts are industry practitioners. Many of them have been traders or trading analysts before, and they can go in and help us with great detail know how to interpret the type of commodity on these different vessels, especially if they load or discharge in certain locations. That allows us to then encode all that expertise into software, and ultimately that produces a very clean, very useful data set that we can then spin out through APIs and others. But there's another critical component of this too, where we bring in even more data science expertise. For example, it's a major question in the industry. If you're going to be using this flow mapping data, can you also look into the future? And for that, we help our clients understand where these volumes are going, what their destinations are going to be, and when they're going to get there. And our system is always improving because as we observe these actual destinations and discharges, we are able to train through a machine learning process our prediction models so they get better and better and over time in a way that ultimately overcomes many of the problems associated with just raw AIS data that the industry might have been accustomed to in the past.
Yeah, well, it'd be great to see this in action. Can you show us the actual platform? And I guess while you're doing that, what's the latency look like? Because I mean, I guess as I think about it, you've got the AIS information coming out. You guys know where the ports are. You're also taking into consideration, bills of lading. Like, this seems like a massive process. Is this something, it's a month later? Is it a couple weeks later? What's the timing on in terms of getting the information in a closer to real-time aspect?
Yeah, that is a really important question. You're absolutely right that it is a major data challenge, and different data feeds are streaming into us all the time. With the AIS data, that's coming into our systems in near real time, and then it's how do we add all these other different pieces onto it. So ultimately what we provide is near real time visibility. So we provide twice daily updates, which capture the latest in loadings and discharges and destination predictions and ETA revisions. And so that's as current as about 12 hours before the data is published. So very, very near real time in that way. As far as what it looks like, I'll give you a flavor for that. So I've just switched over to my browser. Hopefully you can see this. This is a web-based environment within the IHS Markit Connect portal. And you can see a few things. One, a lot of analytics pages. We'll come to that in a moment. But critically to our investor clients is, what does the underlying data look like? To give you a sample of this, you can see things like the name of the vessel, whether it's a completed or in-transit journey, the start date and end date of that, so the load and discharge times of that. You can also see the origins and destinations as well, including predicted destinations if you're looking at in-transit. You can see the commodity covered and the quantity as well. And this is I'm just showing you a sample of some of our many different fields that we make available for sophisticated investors that want to do many different types of modeling with that. So if we move over and look at the analytics section, for example, we use web-based dashboards to make it easy to see these relationships, see these changes in these relationships, and get a look ahead in the market. So here, for example, you can see we're looking at all the volumes of iron ore that are currently in transit on the market. Of course, no surprise, the majority of it's going to China, but you can see the arrival dates for all these different volumes, giving you a look ahead about when each of these different ships will reach their destination. And then another view, you can also look at the load and discharge rates in order to understand whether there's an acceleration or a deceleration in the flows in these markets as well.
So I guess, Carl, looking at something like forecasting trade flows, I'd seen some information on that. Take us through, how commodities at sea would really help an investor to try to get an understanding of what's going on.
Yeah, appreciate you asking that. So there's a couple of different types of applications that we see for this information based on what we provide. So one of the things, and thanks, Justin, for pulling up the slide here, you can see that we provide visibility into the market outlook. So it's not just about showing what's happening right now, but for some markets like iron ore and coal, we can actually give you a look ahead. And this comes through the research notes that we provide as part of the overall Commodities at Sea package. You can see here the expected loads by, say, and discharges of thermal coal going out even to 2021 here. So that's an important complement to what we provide. But then also when you think about the types of applications for this, there's a number of different things that we see. So critically, you can look at this from a number of different perspectives. For example, for those focused on the equities markets, Commodities at Sea in certain commodity categories maps very well to specific companies. So for example, if you look at the iron ore markets, we can predict and know weeks in advance through our real-time observations or near real-time observations of these trade flows, of these loadings. We can help you understand weeks in advance what BHP or Rio Tinto or FMG will report as their trade volumes out of Australia, for example. So very powerful visibility that helps you anticipate ultimately what these companies themselves are going to say. You can see there on the screen, 98, 100% accuracy on what we're reporting as well. You can also use this to start to understand how do we measure or really quantify the impacts of disruptions and policy changes in the market. So right now there's a big story, especially in the coal markets, but broadly in between China and Australia, where China is starting to put certain limits on Australian products. And you're able to see that there's a significant increase in coal vessels being congested at Chinese ports, not being allowed to discharge their cargoes and clear them through customs. That ultimately has major impacts in the market. And you're able to see not just that relationship, but where Australia then has to start shifting their volumes to. And you can again measure all of this in near real time. You can also, for example, another big story these days, you can start to understand when economies are starting to come out of lockdown. So for example, we were watching very closely earlier this year as India started to come out of lockdown, and you started to see a significant increase in thermal coal volumes heading to power plants in India as the textile, as the cement and other industries there started consuming coal again. So many different ways that you can understand with clarity what's actually happening in these markets because of these economies' needs to source raw materials or to find markets for the raw materials that they produce.
So interesting point. I guess when you think about a lot of these ships being trapped at sea, does that just start, the dot doesn't move anymore? I'm thinking AIS signal, I'm thinking bill of lading, it told me where it's coming, going, and what's on it. Are you guys is that a signal if it sits there for a long enough time, a day or 2 days, that you're kind of like, okay, does not compute, the algorithms going out of control here? Or how did you guys pick up on something like that?
Yeah, excellent question. So one of the big things that we're trying to do from a data analysis perspective on the back end is determine whether a vessel is laden or ballasted. So whether it has cargo or does not have cargo on it. And there's a number of ways you can do it, and a lot of it has to do with vessel behavior, but it also has to do with what signals you're getting off of that vessel. So we certainly can see that vessel moving around using the AIS signals, but then you can also watch the draft of that vessel change. And that's a number, the vessel draft, the distance it sits in the water, that's a number that the crew reports out through their AIS transponder. So we're able to pick up on the changes they report in that in order to help us with that. But then you can also watch whether it's pulling alongside known load or discharge locations in order to understand whether there's a loading or a discharge event occurring. And so in this case with congestion, which again is a huge story right now, especially in the coal markets, you're actually able to watch a laden vessel go into a port and effectively sit there. And we're able to look at its position very precisely and know that it has not made a move to discharge yet. And you take a tally of that, you can aggregate the volumes that would represent in terms of commodities, and then you can understand just how much, say, Australian volumes specifically are tied up and look at that relative to others. If we jump over to this dashboard here, for example, this looks at port congestion. You're able to say, I want to look at coal specifically, and I want to look at laden anchored vessels carrying coal in China that are bound for China. So you can see here, these are all the actual vessels right here, right? And you can start to see a few things. One, here's a comparison of 2020 versus 2019 volumes. So you can see we're in a very unusual period right now where there's significant volumes of coal off of China waiting to discharge. Now, who is impacted by that? That's an important question that investors want to know if they want to then link that to companies or countries or commodities. And so one of the things you can do, for example, is you can start to say, well, let's look at the origins of those commodities. For example, you could say, all right, let's look at, say, non-Indonesia, non-Australia coal for starters here. And so what we'll see is that largely non-Australia, non-Indonesia coal is not too different from what we've seen last year in terms of volumes congested. And let me express this in terms of number of vessels here. Now, if we add them back in, you start to see, for example, okay, Australia. Let's just look at Australian volumes. See, significant driver of congestion here. And so there's a very important story for how Australia is being impacted here. And we're watching very closely and reporting out to our users about either where Australian volumes are shifting now that they can't get in, or we are starting to see where there are some Australian origin vessels that are clearing and going into China. And so we're able to watch those and report on those individual vessels and individual volumes. And people will be watching this very closely to determine whether there is a thaw or a change in the policy or certain additional flexibility that comes from that.
Yeah, just one thing, we'll pop up on the screen if you're interested in learning about commodities at sea and meeting with Carl during one of the one-on-one sessions. Please put in your request now. I know we've had some questions from the audience about this has been a very macro-driven market. With COVID-19, as we're coming out of the pandemic, this seems like a great product that could be, even a macro symbol for what's opening up, what's not, especially on the, maybe even on some of the oil side of things. Do you have a way, and you showed us with coal, is there a way of kind of looking at floating storage trends? And I thought I saw it relative to oil. It seemed like a big thing that happened at the beginning of this year was just a tremendous amount of oil being pumped out of the ground, and they were trying to find places to put it. If you were kind of keying in on oil, what would be some of the things you may look at with the commodities at sea products?
Yeah, absolutely. So one of the biggest stories there, you're right, is the role of floating storage in that market. And so just to give you a flavor of what this looks like, for example, we have analytics on floating storage in crude oil and in refined products. And our users would look at this very closely to, one, understand the degree to which floating storage has increased, the duration at which these volumes persist, and especially the timing of when they start drawing down. Because certainly earlier this year, right, big year for oil in 2020, where the Saudis started pushing lots of volume into the market. We were able to be right there counting those volumes as they happened and reporting those out to our users. And you saw that shifted many different types of relationships in the market. But one of the things that it did, of course, is it helped precipitate a significant decline in the price of oil in the near term, which created this very strong contango. One of the ways that you saw the consequence of that contango is you saw many different barrels reallocated to floating storage and then repositioned into markets like the Far East, where they were much closer to market, waiting for prices to return, and sellers then being willing to sell into that market. So our users look at this closely to understand more of that picture, and we're able to provide very detailed visibility all the way down to the individual vessel level, providing insights into the origins, the types of crudes on those vessels as well, and then do the same thing on the refined product side, which was also affected in a very similar way. Those two different insights together also would go into one's understanding of the refining margin outlook as well.
As we kind of wind things up, anything that you're picking up that you think is interesting that you want to show us through the system, or as we go into 2021, we always have investors and kind of data buyers coming to us looking for new insights. Are there things that you're developing with the product or that you're really excited about to be able to track in 2021?
A few things. I'd say one, we cover freight insights related to these commodity flows in a more sophisticated, more detailed way than any other company. Our port congestion analysis that I just showed you was one of them. Our floating storage was another. But right now, given the shifts in these markets and given the the dynamics in freight and the companies that own them, we have a lot of people looking very closely at that. So always happy to speak with companies about the freight side of the business. We also just this year launched our AgriBulk coverage. And so that provides investors, for example, with visibility into soybeans, corn, and wheat flows globally, as well as a number of other agricultural commodities. This is a very interesting market, closely tied to growing populations and trade policy as well. So we've already had a number of companies say, looking very closely at our data set to try and understand, just how much China is actually loading from the United States in keeping with their different trade commitments. So a lot of eyes on this market to understand whether China is buying the raw materials that they said they would, and then ultimately whether those products really are going to that destination. So we expect to see a lot of interest continuing from the investment community on our AgriBulk product. So always happy to share that as well.
Great. And just a final reminder for the audience, if you're interested in meeting with IHS Markit on the new Commodities at Sea platform, please click on the screen and we'll be happy to connect you. Carl, thanks for the insights. Enjoyed it. Hopefully we'll have you back in person one of these days, and we'll look forward to hearing what else is coming down the IHS Markit pipeline.
Looking forward to it. Thanks very much.
Well, next up, we have a compliance panel. So we've been in a pretty dormant compliance landscape for the last couple of years, but as we look to a new administration and 2021, I think this is a topic that everyone is going to want to brush up on and figure out what's going on with the SEC, how do they stay on the right side of the law, and we've got two of the best people to help us do that. So Mark, Peter, welcome. Take it away.
Coming up next, alternative data from a compliance perspective, the year ahead with Lowenstein Sandler. Lowenstein Sandler has more than 100 attorneys dedicated to serving fund and investor clients with AUM in the tens of billions. And their investment management group is a leader in the United States, distinguished for client service. Joining us today from Lowenstein is partner and vice chair of their investment management group, Mr. Peter Green. And now, please welcome your host, BattleFin co-founder, Mark Lopresti.
All right, ladies and gentlemen, thank you very much for joining us for another session, BattleFin's Discovery Day. I'm joined, of course, by Peter Green of Lowenstein Sandler. As many of you know, I have not only the privilege of having co-founded BattleFin with Tim Harrington some 7 years ago, but I've also been an attorney in the hedge fund space for almost 20 years. Have known Lowenstein Sandler as being one of the premier law firms, one of the leaders in the space, the guys with the many millions in AUM turn to for advice on the thornier topics to try to understand the ongoing evolution of the legal landscape. We are here to talk about just that, trying to anticipate what is ahead of us for 2021. Significant changes anticipated, some changes anticipated with a Biden administration coming into office. I could think of no one better than Peter Green to join me for this discussion. Peter, thank you so much for joining us this morning.
Thanks, Mark. Great to be with you all at BattleFin as always, and thanks for that kind introduction.
That's absolutely my pleasure. So, Peter, let's get right into it. We have enjoyed, many would say, 4 years of a pro-business, laissez-faire Trump administration, that being evidenced either at the SEC, which is where you spend most of your regulatory time, but also with the FTC and the other agencies that are involved in the regulation of data. Why don't we start with giving the audience a macro picture? Do we anticipate significant changes in policy with an incoming Biden Democratic administration? And what do you think those changes might be?
So I'll take it from the macro level, as you say, and then maybe come into the micro on data. I think that the commentary that's out there suggesting that we have had this laissez-faire approach and that we might see a more stringent and directed and focused SEC with respect to the buy side and then specifically with respect to data is fair. Perhaps the laissez-faire approach to regulation generally in the fund space is not entirely fair when we're looking retrospectively. Chairman Clayton and his team have brought plenty of regulatory and enforcement actions, and we know with respect to data, which I know you want to talk about later today, have started to look at data more closely. So I think it'd probably be fair to say that what Chairman Clayton and his team have done is likely to accelerate. We're likely to see a Biden SEC build upon what the Clayton Group has done and accelerate its foray into exploration of, however you want to put it, alternative data use and consumption by the buy side.
Well, let's talk about that. Let's dig into that a little bit. I mean, I remember talking last year live and in person, which we hope to get back to very soon, of course.
Indeed.
With the BattleFin audience, when the SEC's 2019 examination priorities came out, a memo that those of us in the business on the legal and compliance side, we wait and anxiously anticipate that memo for exam and enforcement priorities. It was the first time, if my memory serves me correctly, Peter, that data or alternative data in any form was referenced by the SEC. And I think at the time that for many of the folks watching this kind of thing portended an increased focus by the SEC in conjunction with their exams and enforcement actions for investment advisors in the data space. But candidly, that didn't really happen. Do you share that view?
So I think that's right. Look, like anything else that's new, it often takes the staff a while to decide that it cares about it and then to learn, just like anyone else, right? That's no slight on the staff. They take their time and they make sure they learn. So I think years ago, we would have thought, hey, by now, they would have decided they cared about it and learned an awful lot. But probably, we know they've decided they care about it. And so they've probably learned maybe at a bit slower pace than we anticipated. From what we know over the last, say, 6 to 12 months, really probably that 6 to 9 month time frame even, we know that the staff in its routine examinations has started to focus more on data. And so I would say it would not be surprising by the end of next year, even just continuing the current trend without a new administration and a different focus or a modified focus. It would not be surprising to see every routine exam, just OC exams, include requests for data, alternative information regarding your use of alternative data. So what I mean by that is, hey, let's see, staff says, let's see all the vendors with whom you do business, from whom you buy data, and let's see your file on each. And you and I can talk about what we think later on, what we think are best practices in that regard, what that file should look like for the staff. But I think by the end of next year, you're going to start to see that a lot. And what we've learned in these last 6 to 9 months is now certain clients out there, certain managers out there, whether it's clients of ours or others who practice a lot in the data space, and there are really just a handful of firms who do a lot of that work, and our peers in that space do excellent work. I think you're starting to see those examinations focus on data and not just collect the information, but to come back for a second and third round of questions around, okay, what about this vendor? What about that vendor? How are you diligencing that vendor? How do you get comfortable with this type of vendor? So we think the staff has started to use routine exams to learn, and now also to start to focus and learn further with respect to micro areas on which the SEC wants to focus. And we can talk a little bit more detail about that, certainly, as our time together goes on.
So basically, if we think about the timeline and using this information and your experience to kind of read the tea leaves, is it fair to say, as you said, there was a learning period, then there's the information gathering period through the routine exam process, looking at policies and procedures, right? Simply put, to sum up everything that you were just saying. And that part of the reason we haven't seen enforcement action in the space, and this is where the question comes in, is that we haven't gotten to that natural evolution of the SEC's process. Is that a fair way of thinking about it?
I think that's very fair. I think it was too early up until now for enforcement because the staff wanted to learn. It wanted to learn, okay, first of all, what types of data are managers buying? Credit card data, location intelligence, satellite imagery, social media sentiment, app usage, biometric data. It needed to first learn, okay, what are the different buckets? I expect the staff has now learned that. And then you would think the next step for the staff would be, all right, here is 1 or 2 buckets we really care about. We're really interested in these because we're maybe perhaps a little concerned about how you're using this type of data. And we could talk about what those probably most concerning buckets are. Really, the two most important considerations far and away for managers when they are deciding whether to consume data and which providers to do business with. The two most important are insider trading, and which is far and away the most important, and then second most important, but a far away second, although still very much matters, very much, is privacy. And so the staff probably is looking at those two buckets most closely, and then after learning, as we say, and familiarizing themselves with the different types of vendors in those two areas, then moving on to, okay, let's understand this vendor or that vendor. What exactly are they giving you? How do you go about getting comfortable that they can give it to you and that it's okay to buy it?
So when we talk about concerns around in those two buckets, and I agree with you, by the way, that those are the two primary areas of concern, and those are going to be probably the two primary areas of focus as we see in 2021. Separate out for us a little bit, though, because we do talk about, in terms of this panel, it's legal and regulatory and compliance trends. So not just the SEC, we definitely had a very pro-business, laissez-faire FTC under the Trump administration. We did not see a federal privacy policy, a GDPR, if you will, was largely left to the states. California, of course, leading the charge to impose state law through that legislative process to provide some consumer protection. Talk to us a little bit about how that's going to play out. Is the SEC going to leave the regulatory side around privacy more to the FTC and to the states? And to the extent they focus on privacy, how is it going to be an element of what the SEC is concerned about, which is things like insider trading or unfair advantages in conjunction with market participants?
Yeah, sure. Great question. So let's just focus on CCPA to start. The problem with state law in all these areas, whether it's California, Colorado, Massachusetts, New Jersey, it's great, but it's really hard to be a practitioner and it's really hard to be a buy-side consumer of data, because trying to comply with each state's law with respect to privacy really leads you to the lowest common denominator, which is the most restrictive. I need to comply with that, because otherwise it's just really difficult. California. It's just, no question, it's just really difficult for a manager to make its way through the morass of all these state laws. Look, we've had impeachment and now we have a tragic pandemic. And so the federal government has had its eyes on other more important topics. But we do know, or at least we think we know, that there is bipartisan support for federal privacy legislation. And as a practitioner in this space, that would be great. It would be great if we got a federal law that was the law of the land with respect to privacy. And we can talk about some examples of that, geolocation data and opting in and consent and those types of issues, because then we would know what everyone needs to do. There would be no navigating your way through all these different state laws. And it would be much easier for the buy side to comply with privacy legislation rather than trying to navigate state by state, which has proven challenging. And so, but not to dodge your question, on state by state, so what do managers do? The irony, of course, for the buy side is the buy side, we have no interest in personally identifiable information, PII, or personal information, as they call it in the EU. We don't care what Bill Smith did or where Jane Smith went. And in fact, we don't want that information. It doesn't help us. Having it only makes us subject to all these different state laws we're referring to. And then, of course, subject to the potential for breach. And heaven forbid there's a breach. What do you do about it? How do you comply with state law notification requirements, which are all different state by state? If there is a breach, the buy side doesn't want that. The buy side, in its contracts, in its diligence with its vendors, in its DDQ with its vendors, and in negotiating its contracts with its vendors, doesn't want any of that information. Please don't give it to us. The buy side is really most concerned with, well, what if they inadvertently give it to us? Then what do we do? So if we could get some good federal definition around what privacy legislation and requirements look like, that would only make it easier for the vendors and for the buy side purchasers of data. If then you move to the second topic you raised, which is insider trading and sort of the interplay between the buy side privacy concern and the buy side insider trading concern, let's not make this a seminar, but let's just spend 30 seconds, maybe 60 seconds. In the US, in order for the government to make out an insider trading case, it must prove three things. It must prove that you had information which is number one, material, information which is number two, non-public, and information that, well, you shouldn't have had it. Either you misappropriated it or you received it in breach of a duty. And the government's got to make out all three of those elements: materiality, non-public, and, for lack of a better way of putting it, how did you get it, in order to make out an insider trading case. Incidentally, and we can spend time on it later if we have time, in the UK, the EU, that's different. There is no third element. There is no how did you get it, no misappropriation, no duty, no personal benefits, all these really nuanced things that make lawyers lie awake at night. It's just, was it price sensitive, their words for materiality, and private, their word for public versus non-public. So now let's move back to the US. We've got this materiality, non-public, and how did you get it? For all the types of data sets, so it's more than 60 seconds, sorry, Mark. For all the different types of data sets that we always discuss, with the exception of web scrape data, and I'll come back to that in a minute. With the different types of data sets we discuss, let's just assume it's material. Mark, our clients, are paying hundreds of thousands, if not millions of dollars for certain of these data sets. Yeah. Tough, not impossible, but tough to argue, hey, this data set's not material, I paid $1 million for it. That seems like an uphill battle. Not impossible, could be mosaic theory, but let's just assume it's material. Well, you're buying all this data, you're paying all this money for it, so it's clearly non-public, otherwise you wouldn't be paying all that money for it. So pretty easy for the government, we think, with respect to all types of data, other than web scrape data, we'll come back to that, pretty easy for the government to check both of those boxes, materiality and non-public. Okay, so then how do we get comfortable that our clients can buy credit card panel data, location intelligence data, satellite imagery, app usage, social media sentiment? Well, how? Because that third box, we're really careful on how we diligence these vendors. And we think the government, if we're really careful, can't check the third box, because the data provenance, as we like to call it, is clean. That means every link in the chain, from Lopresti's credit card information, his purchases and returns at various vendors, all the way through to the buy-side shop who buys the credit card panel data with Lopresti's de-identified anonymized transaction data in it. Every link in that chain is pure. And what I mean by pure, and what I mean by data provenance, is everyone who shares it is allowed to share it with the next party, all the way through to the buy side. And that's
meaning
what
it was
we are
permission.
insanely careful about.
Right. I mean, so Peter, let me start. So just meaning that because I want to zoom in on that, because that's a really important component of it, meaning that you had permission to get my credit card data somewhere in that life cycle or that data compilation process. I said yes.
Yes.
In exchange for whatever benefit, I'm going to give you the ability to look at my American Express statement.
You and I are old enough that we remember getting a little pamphlet at home every year with the user agreement for our credit card, right? and you don't get those anymore. Now you just click through. But that pamphlet you got, that none of it, maybe you read it. I didn't read it. I threw it away. But that pamphlet you got from Capital One or MasterCard or Bank of America almost always said, hey, as long as we de-identify and anonymize your transaction data, we, MasterCard, can sell it on to American Express. Right. We can sell it on to any third party we want for any purpose, for any compensation we want. We don't have to get your notice. We don't have to give you notice. We don't have to get your consent. We don't have to share that money with you. And so that's the first link in the chain. And then if MasterCard sells it to somebody else, who sells it to somebody else, who sells it to the hedge fund, we just want to make sure in every link in the chain there is, as you say, permission. And if there is no breach of a duty. There is no ability for the government to check that third box. And so despite the fact that that credit card panel data is material to, hey, we're researching Bed Bath & Beyond, and we want to see Lopresti's and millions of other users' transactions in Bed Bath & Beyond the prior quarter, because we think it will allow us to help model out and predict, along with other fundamental analysis, Bed Bath & Beyond's pending quarter. As long as that's the case, well, then the government, despite the fact that it's incredibly material to Bed Bath & Beyond and that it's non-public, the government can't check the third box, and they can't make out an insider trading case. That's why, and now we're going to talk about how we do that. That's why the diligence, onboarding, and contract negotiation process for data vendors is so critical, because it's handcuffed material. If you get this wrong, you are potentially in the crosshairs of an insider trading case. Now, there hasn't been an alt data insider trading case yet, but we think, as we talked about at the beginning of our time together today, Mark, we think we're getting closer.
Talk to me about intent for a second. So you gave those three standard elements, and anybody that's followed any of the famous insider trading cases that have come through the industry in the past 7 years, and I won't name names and firms, but we know who they are. Where has the role of intent played, and how much of that provides some layer of protection for managers that say, look, I hired Peter Green, I hired Lowenstein, I got the best policies and procedures for data in the space. I can show you how I follow them. We have proof of every step being taken. We're not just checking boxes or asking managers to give us reps and warranties that they could, also promise me that they're the Queen of England and nobody's checking. We are the best in the business. And yet somehow, despite all of those efforts, something still made its way through. And now we're being alleged to have traded on the basis of that, that MNPI, as we call it, that material non-public information. Where does intent fall?
So look, we think it's really unlikely, Mark, especially because there has been no case. And similar to other types of insider trading, right? This would be a new one. We think it's really unlikely that if you have a robust set of policies and procedures and you train your folks on those policies and procedures and you carefully negotiate the reps you get from the buy side and you look at the data when you get it and you raise your hand if you think, hey, wait, boy, I'm troubled by this. I didn't think I was going to get this. This looks a little too good to be true. Yeah. So in other words, the court has said in the past in other contexts, can't recklessly disregard what you get, right?
Yep. If you see something, say something and
that's
document.
Right. That's all we ever want. Nobody's going to be perfect with how they handle this. We know that. But have a good set of policies and procedures, have training, have robust reps and warranties in your agreements with your vendors. Also, behave in similar step to the market. We're going to talk about web scraping if we have time. We're going to spend 5 minutes on that. And that's an example of we're doing our best to take the facts of web scraping and what it is and apply it to the existing law we have. But we don't have on-point law on web scraping in the insider trading context. Far from it. But know what your peers are doing. Don't be out of step with the market. Don't be different than similarly situated folks with respect to where you're drawing the line. And in that case, gosh, especially at this phase of the life cycle of alternative data, it seems extraordinarily unlikely that you will be in the crosshairs here. Maybe part of your deficiency letter, we all know almost everyone gets a deficiency letter. Maybe part of your deficiency letter says, hey, you need to do better with this policy or this procedure or this question on your DDQ. That's okay. And so we all get better and we do a better job because the staff educates us and we get better guidance from the staff as to what passes muster with the staff. Look, none of this with respect to any type of compliance policy or procedure, none of this means perfect. We talk about best practices. Well, best practices are just that. What's the best we can be doing in order to try to mitigate any opportunity or chance for nefarious conduct by our team? Doesn't mean we'll always do it. It just means we're really trying hard to mitigate.
So let's tee up the web scraping. I know you want to talk about it, and I want to talk to you about it too. Let me tee it up thusly, Peter. Is it fair to say that in the context of evaluating what you need to do as a manager, and by the way, I want to talk about also as a data provider, because I spend a lot of time talking to the BattleFin data provider audience about how they can make themselves more marketable. They can increase their chances of closing that deal with that top tier hedge fund by providing their own policies and procedures, their own data gathering policies with samples, with provenance, that sort of birth certificate of data. And we could do a discussion on that topic alone. But is it fair to say that through this lens, all data sets are not created equally? In other words, do I need to look at my satellite data imagery provider differently than I do my web scraper? And that was a softball for you to get into web scraping.
But let me first agree with you. I've been focusing on and talking about, referring to the buy side. You're right. Yeah. We're all in this together. 10 plus years ago, it's more than 10 years ago now, I guess, we all got concerned about expert networks. Expert networks are a problem. And the industry has cleaned itself up, and it's cleaned itself up collaboratively. The expert network shops have worked with us as counsel to the buy side, and we're all in a much better place with respect to those policies and procedures. And that's because we worked at it together. The same thing is already happening in the data space because you are doing a good job with your data provider clients, and those data provider clients are working with our buy side clients. There's no question that collaboration here between both sides of the equation, it makes this much better and it makes things go more quickly. You're right. Your clients want to close on the deal. So they should know what should be in the contract in order to get the buy side comfortable. So we don't have to go back and forth 5 times. Worse for lawyers, of course, right? 5 times always better for you and for me. But let's not go back and forth 5 times. Let's start with something that we know is going to satisfy the most sophisticated on the buy side. So now let's move to the web scrape data. I think that let's run through our elements again. Materiality, non-public, and how did you get it? Let's assume web scrape data is material, same sort of analysis with respect to every other type of alternative data set we discussed earlier. You're paying a lot of money for it. Maybe there's a mosaic argument, but it's usually an uphill battle and we don't want to rely upon it. So yes, it's material. Let's skip the second element now and jump towards that third element if we can. So we talked about this data provenance and not misappropriating or receiving in breach of a duty, so the government can never check the third box, so we're comfortable. Well, web scraping, that's a problem. Because if we look at virtually any website these days, go online, read the terms of use in your spare time. I know you've never done it. I know we all click through to whatever's down there and we just move on. But almost any website of note, we surveyed this a number of years ago, any website of note now, not only says, hey, you can't use my information for any purpose other than to evaluate my product or service. They also actually expressly say, you cannot web scrape, use robots.txt, web crawl. They use those words. So we know if we go on a website and we scrape, we know we are misappropriating the information, or at least we very arguably are, because it says, hey, don't do that. And we're doing that. And then we're using the information for a purpose other than to evaluate the product or service. So if you assume that analysis is true, and remember I said element 1, well, it's material. Element 3, now we've misappropriated it, so the government can check the third box. Well, that's a big uh-oh then. We say, wow, so how could we ever web scrape and not have an insider trading problem? So here's the answer to that now, and here's where the market is on that now. We go back to that second element of public versus non-public. And the reason we're comfortable is if you're not, I'll skip to the end first and then backtrack. If you're not putting in a username or password mark, if you're just plugging in your computer and you have an internet connection and you can see the material and scrape it, you or I could do it. It would take us decades to do it by right clicking because we don't know what we're doing, but we could do it. Well, then it's public. So it really centers on what does it mean to be public on the internet? And so there's this really interesting case, HiQ versus LinkedIn. I won't bore you with the details because I know we don't have time. Out in California, Federal District Court in San Francisco, really well-reasoned opinion affirmed by the Ninth Circuit, currently sitting sort of idling in front of the Supreme Court. And that case helped with what does it mean to be public on the internet? And what that case said, and it wasn't an insider trading case, it was a Computer Fraud and Abuse Act case, but still very instrumental, very well-reasoned. That case said, hey, if you're not going behind an authentication gateway, if you're not putting in a username and a password, well, then it's public. It's like walking around the shopping mall 30 years ago and looking in the window, you could do that. Standing in a parking lot and asking people what they bought or counting the number of cars, you could do that. The village square hundreds of years ago, still public is public. And if you're scraping on the internet, but you're not putting in a username or a password, we're pretty confident, and so are our peer firms we mentioned earlier, that you don't have an insider trading problem because the information is public. You may still have a problem in that you're breaching the terms of use, and because you're breaching the terms of use, well, then maybe there's some argument and a cease and desist letter could come your way because it's sort of like a business tort, but that's not insider trading, and most people in the industry are willing to take that business risk. It's not a securities laws risk.
So that's one of the reasons why it's so important to understand in your evaluation of guys that are conducting web scraping as a data compilation service, make sure they're not, as we call it, spoofing, right? Because a lot of what we've seen, I shouldn't say a lot, what we've seen in the context of bad actors in the space is where they are actually creating dummy account after dummy account after dummy account to do that user login and password thing. And if you're doing that, you lose the protection, as you were just saying, of saying, hey, wait a minute, this data was public And if the data is public, you don't have MNPI, you don't have that material.
That's right.
Non-public, that second element.
I agree with that. Do not put in a username and password. Do not put in a username and password. And that's where the market is settled too. So even if that's not right, and even if the law changes, or not really changes, but just matures and gives us an answer here, right now, that's where the market is.
Yeah. But ask the question, right? When you're doing your diligence on the data provider, ask the question.
And let's go further than that just for 10 seconds.
Yeah,
Whether you're doing an internal scrape or you're hiring someone and buying scrape data from somebody else, ask your internal folks, fill out a form. Are you in fact putting in a username or password? And certainly if you're negotiating an agreement with a third party who's going to scrape on your behalf, get them to represent and warrant that they're not putting in a username and password. That protects you.
So let's talk about that in the few minutes that we have left. And I want to thank everybody for their attention. I know that when I do these live events and we talk about selling data and trends and what's hot and what's not, that when I get to the compliance part, which Tim always lines up just before cocktail hour for some reason, I don't get the same joy in the face of the audience. So thank you everyone for listening. We're really privileged to have one of the best in the business, Peter Green, here joining me this morning for this discussion. In the few minutes we have left, Peter, let's talk about, I'm going to challenge you to dig a little deep, right? So most of our audience here that's on the buy side, they're registered investment advisors. If we say policies and procedures and execution of that, they say, yeah, Mark, yeah, we know, we got a great manual. Peter's team or somebody else gave it to us. We spent a lot of money on it. We have a top flight CCO that makes sure that those policies are enforced. We do mock audits. Our last 2 routine exams, we had minimal deficiency letters. Give us some inside, the good kind of inside information on what does it mean to really be at the forefront when it comes to alternative data. And I'll give you a hint. I said before, and I have my own thoughts on this, it's got to go deeper than just having your data providers check a bunch of boxes and give you a bunch of representations that anybody could make. Give us your thoughts. Give us some nuggets here.
I agree with you. When the staff comes in, they say, hey, Mark, show me your file for alternative data. Give me your file on every vendor. What should be in that file, right? To me, that's the best way to answer your question. What should be in that file? 3 things should be in that file. 1, there should be a DDQ. Some of my clients have a 4-page DDQ. Some have a 20-page DDQ. Got to come up with a DDQ that works for you and your organization. That's not too large, such that you don't review the answers and ask follow-up questions, because that's no good, as we know. So what does it? We need a DDQ. So fill out the DDQ. That's step 1. Step 2, you review the DDQ. Then maybe you have some follow-up questions in writing. Then once you're comfortable from a DDQ perspective, we move to step 2. What's step 2? Step 2 is a phone call. So it's a phone call to the data vendor, whether it's you, Mark, as an outside counsel, or me, or an inside lawyer, an inside compliance person, or both, talking to the vendor and talking in terms you and I can understand, right? We're not data scientists. We're not technology folks. We're lawyers. Hey, my client's buying what? Explain to me what they're buying. Tell me what you're going to give them, and then tell me where you're getting it from, right? Yeah. That's what I really want to know. What am I getting, and where are you getting it from? In a way I can understand it. And then we're going to have that call. That call is not going to be a 2.5-hour diligence call. It's going to be a 30-minute call, 20-minute call, 35-minute call. And we're going to understand what we're getting and where it's coming from. Then we're going to write that up. It's not going to be a 10-page memo. It's probably going to be a page memo. And you're going to develop a form that you use for every data vendor, plug and play. We had a call on this date with such and such. We asked these questions. We're comfortable. And here's why we're comfortable. 10 bullet points, 8 bullet points, whatever it is. And then a conclusion. So that's part 2 in our file for each vendor. Part 1 was a DDQ. Part 2 is some sort of diligence memo reflecting the results of a conversation that someone on the legal compliance side, internal or external, had with the vendor. And remember, most vendors now have internal legal compliance folks. They probably didn't 5-6 years ago. Now they do, because they understand the importance of this and they want to get a deal done. And they know they can't get a deal done with the most or even modestly sophisticated folks on the buy side, to the extent there's varying degrees of size on the buy side, unless they have such a compliance or legal person in-house, or at least really good outside counsel to handle it. And then once we're comfortable with the DDQ, once we're comfortable with the diligence, and I would say, Mark, at this point, we probably get comfortable 90 to 95% of the time, whereas 5 years ago, we probably got comfortable directionally 70% of the time. Now we move to number 3. What's number 3? Number 3 is a robust set of representations and warranties around data provenance. The vendor represents to you in the contract, whether it's a trial agreement or or an actual agreement, more so in an actual than a trial, which we didn't touch upon, but more so in an actual, that one, it has the right to sell you the data. It has the right to sell you the data for your intended purpose. That is financial modeling and analysis. That by selling you the data, it's not knowingly breaching any obligation, duty, or covenant to any third party. That the data itself doesn't contain any PII, sort of intersects here with MNPI, securities laws and privacy, intersect at this point. That it has policies and procedures on its part to make sure that it complies with all those reps and warranties, and not a necessity, but a nice to have, that the data it is giving you does not constitute material non-public information. Some vendors will give it to you, maybe some won't because it's a legal conclusion, but maybe there are ways to draft around that so that both sides are comfortable. So then the SEC comes in, you're showing them a DDQ, you're showing them the results of a compliance and diligence process, an interview of some sort, and you're showing them, hey, we got reps and warranties around data provenance, and then add to those reps and warranties for web scrape data, those reps and warranties we talked about around, hey, this is public, we haven't put in a username and a password. To me, that you ask, well, what are best practices, policies, and procedures? Those are three words we like to use all the time, right? Policies and procedures, policies and procedures. What does that mean? This is what I think it means in the data context. And I think if you have that type of file on every vendor with whom you do business, the staff comes in and looks at that, I think you will be at the front of the line in terms of best practices, and thus much less likely to be in the SEC's crosshairs when it first starts to bring enforcement cases and ultimately insider trading cases surrounding the use of alternative data by the buy side.
Peter, that's terrific. That's incredibly valuable information, advice that you would normally have to pay, God knows, probably about $1,000 an hour to get you on the phone. One other thing that we're advising folks in the BattleFin community and in the practice, to the extent that you can get some form, some example of the provenance of the data, a document
yes, let's talk about that.
That demonstrates how they get that data in some way, shape, or form. I think that would be also a very important. It's like, as I've always said to my grade school daughter, with helping her with her math, it's like you got to always, if you can show your work, if you can show the SEC your work, if you can go beyond just something that says, yes, I got a bunch of reps and warranties. Well, people have been getting reps and warranties from counterparties, since time immemorial, and that doesn't necessarily mean that it's going to protect you. So we're also telling people, try to get some sample, whether it's code, whether it's a list or an explanation of what the processes are that the data vendor goes through to compile that data, get it, append it to the memo that you were just talking to, put it in the file.
Yeah, so I agree with that. Let me just build on that for 30 seconds.
Yeah, sure.
So what we often ask for is, hey, can you show us an excerpt from your agreement, Mr. or Ms. Data Vendor, with your supplier? We don't want to see the whole contract. We don't want to know who your source is. We're not looking to get at your secret sauce. We don't want to know how much you pay for it. Everyone's entitled to make a buck. That's fine with us. But show us the rep you get from your immediate supplier in the chain. Sometimes they say yes, sometimes they say no. And if you could append that as an exhibit to your agreement, I agree, then you've really, really surpassed, in my mind, or achieved at least, best practices. Sometimes you'll get it, sometimes you won't, but it's worth asking, and you raise a great point.
Yeah, and it depends by data provider. There's a lot of data providers. We have many on the BattleFin platform that are in what one might call the survey business, right? So I'm going to share some information with you in exchange for a benefit. You're going to answer some questions, et cetera. Get copies of those essential elements of the survey where you can demonstrate that you're getting permission from the user so that you can satisfy those elements that Peter talked about so eloquently earlier today. Peter, once again, thank you so much. It's a pleasure to have you. We hope to have you back again soon to continue to educate the audience about best practices, how to stay out of trouble with the SEC and other regulators. And to the audience, once again, thank you very much. It means a lot that you continue to join us for these sessions. We hope you find them informative. We look forward to seeing you again in person very soon. And in the meantime, stay safe. Happy holidays. Thank you for being part of the BattleFin community.
Thanks very much, Mark. Thanks for allowing me to be with you.
It's my pleasure.
All right, great. Well, that's day 2. Hope everyone had an awesome 2 days so far. We've got one more to go. So, be ready for tomorrow. We're going to put up the list of providers that you can do meetings with. If you're a buyer in the audience and you want to get access to some of this data, it's easy as going onto Ensemble and clicking that meeting button. Just a final reminder, please make sure to do your one-on-one meetings, set those up. There's invaluable data out there and we want to get it in front of you. So enjoy your meetings this afternoon and we'll see you tomorrow.